How are you?
Doing well. Are you, Jordan? Good to meet you. I got to say, I'm pretty
Doing
humbled.
great. My pleasure. My pleasure. Just got back from Florida the second. So
Awesome. Yeah, well, I appreciate you getting on the call with me. I know that, your assistant said that you had some sickness and stuff. Hope you're doing okay now and feeling good.
yeah.
Nice
Oh
and
yeah.
healthy.
It's a sore throat. I'm okay.
Awesome.
Doing good.
Right on, man.
Ready to roll. Let's rock and roll, buddy.
Awesome. Well, we won't waste your time. We kind of ran into you because on Twitter, there's been some speculation that you've been paying attention to the AMC and GameStop situation. I got to say, I've been watching your channel for a while. I love your podcast, The Wolf's Den, man. I love, watch all the guests you bring on. And I think there's a huge opportunity for some education. There's a lot of stuff that you know. And I think with everything going on with AMC and GameStop, there's a lot of people that are getting into investing who don't really know a lot about the market. And to be honest with you, I'm still a learning investor myself. So I try to learn as I go, figure out the process. And as I'm learning, bring people with me. And I think there's a great opportunity here with your knowledge and expertise and experience to bring some light to some different things that are happening in the market. So I kind of wanted to talk about that, what you're thinking about the current market, climate, the AMC GameStop situation, because we got to say, I mean, there's definitely been some cool stuff going on your Twitter, and I'm very excited for sure.
Yeah. Well, I mean, I think with GameStop, especially because I made a really, really right on the money call just to like the last couple of weeks. I said that if the stock stays up much longer, the company will just issue more shares. They'll do a secondary. They'll dilute out. I mean, the market, essentially it's not a good thing when a company sells a ton of shares in terms of the impact it has on the price. I mean, it's all supply and demand, right? Listen, it could be good for the company in the long term if they take that money and they put that to use and, create more value. But generally speaking, I mean, it's like this is like not a good thing for the price of a stock in the short term, because when they do a secondary, it brings the price down. So, but who knows when it comes to GameStop, because everything with GameStop sort of defies logic. So
yeah, nothing technical about it. Doesn't make much sense. I'm glad you brought that up because there's actually been a lot of FUD kind of going around with dilution with both AMC and GameStop. So the AMC CEO, Adam Aron, has been talking about this shareholder vote for passing 500 million shares to dilute. I personally voted no for that because in the short term, it dilutes supply and demand. Like you mentioned, you increase the supply in the short term, the price is going to cut in half into a third or whatever it is. What do you think about that situation? And do you think it's pretty likely that passes? What kind of, advice would you give?
It'll pass. So? It'll pass. It has to pass. And why wouldn't it? It would be ridiculous for it not to pass. In other words, I mean, for you to vote no, I understand, like, it's not like a rational decision to vote no. In other words, the stock is wildly overvalued. It just is. I mean, it's just there's no possible scenario which either GameStop or AMC is fairly valued. At this price, they're wildly overvalued. Right. So it would make sense. The reason I knew this was going to happen is because how could it not happen? Like, the management has a fiduciary to you as a shareholder. It's a responsibility to you to take advantage of an inflated price. If people are going to buy it when it's, at 10 times the price it should be trading at fundamentally, then it behooves the management to raise money because it's not that dilutive. To raise that much at that high a price, you're not diluting people out that much. It's one thing if the stock was $8 a share and they sold 1 billion shares, that would dilute everyone out. But it's anti-dilutive at this level because it's not worth this much money. You're raising, whoever buys the stock, in my mind, is kind of nutty. It doesn't make sense. Listen, the whole thing right now, it doesn't really make sense in terms of it's just not trading at a fundamentally, justified price. That doesn't mean you can't make a lot of money trading it at these high prices, whatever. Right. But I just don't see how you justify it. It's just trading here. You're just betting that some guy is going to take a company and make it worth infinitely more money in the future. But it's not a really good bet as versus a company's already on the way there. I don't know. I mean, it doesn't really make much sense to me, but.
Sure, yeah, I see what you're saying. I mean, and fundamentally speaking, AMC and GameStop both are 100% overvalued. I mean, GameStop trading at $200, $300, all the way up to $500 doesn't make sense, and it goes against all logic, like we've been saying. I think what it comes down to is just kind of like the cult following that they kind of have. I mean, people are just buying it because people are buying it, But I'm totally with you. In the long term, it's going to be good for the company in the sense that it will raise cash. It'll help AMC get out of debt. That's a whole sort of situation.
The problem is that I think people don't understand the difference between Bitcoin and GameStop and AMC. Like people have gotten this really strange, they're in this false sense of security right now that we'll just hold it and it'll come back. Because like they watched it happen with Bitcoin and it did come back, but Bitcoin is not a stock. Bitcoin cannot issue shares whenever they want.
Right.
There's very, very finite supply of Bitcoin, which is what gives it its value, so to speak. And I'm a bull on Bitcoin right now because I think that the technicals are going to bring it higher, but that does not exist with the GameStop. This is exactly what will keep happening. If the longer the stock stays up at an inflated value, the more shares they will dump on the market until it goes back down to and just mark my words, it'll keep happening again. They'll keep adding more and more and more shares onto the market because why wouldn't they?
Right.
It just doesn't make any sense. It's essentially increasing the book. It doesn't make any. You understand what I'm saying? Like it's helpful to the company to raise money at this point. They should, so they'd be crazy not to.
Yeah, they were both on the verge of bankruptcy. I mean, with GameStop failing at the brick and mortar locations, everything going e-commerce at this point, it definitely makes sense to raise that capital and kind of rebrand themselves in that way. So with that being said, them diluting the shares down and trying to raise capital so they can continue to exist, to thrive, to potentially grow down the road. What do you see happening over the next 6 months to a year? Do you think there's people are going to walk out the other end of this getting pretty burned? Do you think that there's actually potential with all this stuff going on? Like people are pretty well expecting a second squeeze like we saw the first time. And I'd be curious to know if you think there's a chance of that happening again.
I don't think that happens again. I think I predicted the second squeeze. I predicted when it fell back down, I said it was going to happen. I was exactly right. So the stock really got clobbered. I said, everyone's like, it's over. So I said, no, it's not over. Although it was really less of a short squeeze, more of like a gamma squeeze with options, like people buying the options. Then people who issue the options want to make them, they issue in calls. They want to make them covered calls. So they buy the underlying stock to reduce their exposure. So that drives up the underlying stock, right? That's what drives it up. If people buy enough options, it'll drive up the price of the stock. If someone's got to sell them the options, the people that sell the options don't want unlimited exposure. So they go buy the stock and create a spread and they get called a covered call, right? That's who writes the institutions write these instruments. And typically the people that make money options are the ones that write options, not the ones that buy options. That's an old law on Wall Street. Listen, I think there's a big misconception here about, first of all, I'm on the side. I love that the average person's making money. I don't want to think for a second that I'm against. I think it's great. What I'm saying is, it just doesn't make any sense. And there is no way anyone's going to ever justify to me that this is rational and it's sustainable. I don't think it's sustainable. At some point, what's going to happen is right now, I don't think you realize you're young. How old are you?
23 years old. Very young. 23.
I have pants older than you, and I'm not even kidding. I have clothes in my closet older than you, right? So I'm just telling you, when a bear market hits, all of this stuff goes out the window. There is no more stocks that we like and story stocks. The stocks that don't have fundamental value go to freaking zero. Like they go down, like they go drop like faster than you could ever imagine. Everything does. A rising tide lifts all ships and a falling tide sinks all ships. Now, what you end up having in really bad bear markets, and it will come, and it's coming. It's going to come maybe tomorrow, maybe in 3 years, but it's coming. Okay. And when it comes, this is not going to last. It can't. It will not. It will, whatever the actual value is, it'll probably drop there and below because everything trades below its value in a bear market. That's what a bear market is about, right? So, and what's going to trigger the bear market? Who knows? It could be a black swan event where something happens, or it could just be, interest rates start going up. I doubt that's going to happen so quick though, because the government can't afford for it to happen. But you can't, like you guys are, I want to be very clear here to everyone that's listening. If you have a young viewership, you guys are operating under this very, very dangerous assumption that a bull market lasts forever, and it doesn't. And there's a completely different set of rules that apply to a neutral or bear market. All you've seen in all your time investing is a raging bull market, and everyone looks really smart in a bull market. People look very, very foolish in a bear market, and they look just as foolish in a stable. Like even in a stable market, everyone looks kind of foolish because it's really hard to beat the market. It just really is. Like no offense to anyone, it's a very difficult thing. You know what I'm saying? Like Warren Buffett, if he makes 12%, he's a genius. The guy in the real world. So it's like these ideas of making these extraordinary returns. They don't exist in the real world. We're all being part of this incredible combination of a bull market that's fed by the government dumping massive amounts of capital into the economy and banks lending absurd amounts of money. It's all the same thing that happened in 1999, 2007. It's the same cycle repeating itself again that never really fully cleansed out of the system. I'm not a doom and gloom guy. I'm not saying it's happening tomorrow.
Right. No, I totally
like this
get
could go on. It could go on for 3 to 5 more years. I don't know. And I think everyone should make as much money as they fucking can until that point. What I'm saying is be careful.
Definitely.
Because you get spoiled by these markets. And then suddenly, I remember 1999, I had a lot of friends that they became day traders. It was just exactly as it is today, my friend. Exactly. Everybody and their grandma was a day trader. It was all the rage. And in a period of like 3 to 6 months, everyone got wiped out. Wiped out. People that had great careers and as mortgage brokers and they left it to become day traders and they got destroyed because what you don't realize is this stuff, none of these strategies work in a down market. They only work in up markets. So that's the danger. So in the meantime, I think what the smart thing to do is to like make as much as you can now.
Right. Well,
and
while
play
the price
these
is overvalued.
and then play these momentum. Right. But make as much as you can.
Exactly.
But just be aware, and you brought up a very good point in the beginning, which is educate yourself so you know both sides of this, so you can see it coming, and at least take some chips off the table.
Right.
I have a lot of respect for the people that started this GameStop thing. Keith Gill, who did the early research. All these guys, they're very smart. They were right when the stock was $4 and $5. It's a very smart trade. It's a good thesis, right? It was really great. But now it's a different animal right now.
Yeah, that makes total sense. And that's why I wanted to bring you on, because I'm not trying to BS anybody. I want to get the unedited, the no filter, straight truth on what you think is going on, because that's what matters the most to me is education. That's what my channel is built on, is just seeing what I see and, bringing that to the public so we can, get the word out there and just try and tell people what's up. You actually brought up something that's really interesting, which was the idea of banks being able to send out a lot of capital right now. And something that I was reading on some news articles is talking about a supplemental leveraging ratio, which I think ended on March 31st. So this is the idea, I think, that banks are able to lend out more capital to big institutional buyers who could have potentially been over leveraged. And after that expired, I remember seeing in the news that some of these hedge funds got liquidated. I think Discovery and Viacom both took some pretty nasty hits. And that seems like it could have been a precursor for this bear market that you're talking about. Do you think that's something with merit to it? Do you think that could be like the black swan, where you see some big hedge funds that do get liquidated because maybe they are over leveraged, or there's banks that are sending out liquidity? Am I way off the ball here? Let me know what you think.
I don't think so. I don't think that. I think it's something going to be much different than that. I don't see those type of things really making an impact. You have to understand something. There's a very vested interest that the government has right now in keeping things going. Right. They keep kicking the can down the road and kicking the can down the road and kicking the can down the road. Our deficit is 20 plus trillion dollars. The interest on that deficit would be crushing if interest rates ever went up. They can't let interest rates go up because they can't service the debt. If the interest rates go up, there's no way to service the debt. So they're almost like locked in right now. They have to keep interest rates low. The problem is going to happen when if something happens and inflation takes off. That's going to be a disaster of like biblical proportions, because what should be happening right now and what's not happening is there should be rampant inflation, because the government is printing money and expanding its balance sheet and printing money. But for some reason there is not, at least they're not saying that there is. But for example, like I'm watching the housing market go up like by insane amounts.
Right.
I just bought a new car I just bought a new car for my fiance, right? I got her beautiful Aston Martin, the truck, new one, right? $220,000, right? And I went into the dealership and we looked at a few of the cars, And I was going to just buy her a car. She wanted a car, right? And I was going to buy her a car. And I was going to pay for the car, like give them the money. And then the guy says to me, don't do that. Just, you have good credit. Your credit's perfect. We'll give you the car. Just pay us $2,600 a month. And I'm like, fuck. I'm like, all right. Well, I might as well hold my money. I mean, I'll write off the $2,600. I mean, so I got this brand new, beautiful $250,000 car almost for what I paid for dinner in one night. All right. Now, think about that. And what shocked my fiance, she's from Argentina. She's like, I don't understand how that happens. Like, we can't do that in our country. You have to buy the car and earn the money. People don't have that. I have friends that are buying houses right now that are $10 million houses, and they'll put down $2 million and borrow $8 million on an interest-only loan at 3%, and they're paying $20,000 a month to live in an $8 million house. A $10 million house.
That's insane.
That's not normal. Yeah. Like these, you understand? Like right. there's an inflationary, there's something going on right now where money is just so easy to get right now. And you're seeing it prop up, especially in the ultra high end of the real estate market, where prices are just skyrocketing because money is so cheap. That reminds me a lot of 2005, 6, 7, and 8 before the GFC. All right. Now, again, I think the bigger threat here, though, is inflation. When I was a kid, just so you understand, when I was growing up, interest rates, you know what they were? 22%.
That's pretty high.
22%.
Right.
Okay? You want to buy a house, it was like a $200,000 mortgage, was like $4,000 a month.
Yeah, that's
seriously,
night and day.
It was crazy. Right. So everyone is. So what else happens? I think it's very important for the stock market. So what happens is when interest rates go up that much, what happens is money flows out of the equity market and flows into the debt market, into bonds, T-bills, treasury notes, corporate bonds, commercial paper, all the things that give you a fixed income. Because at the end of the day, in the real world, what drives the market is return on investment, right? This is what it's really all about. People don't really understand this, and they should understand. This is the most fundamental thing. At the end of the day, what everyone is hoping that one day the company will be successful enough that it can pay a dividend on the shares, so I can just hold my shares and collect my dividend, right? And that's like that's a conservative, that's a value-based strategy, and that's called the yield. Right. So stocks companies that are successful will pay a dividend. So the stock has a yield. So even if you don't sell it, you still get income off the stock. Now that competes with bonds. So when you buy a bond, the bond might have a yield, a coupon of, let's say, 6% or 5%. So that means if you have, for $1 million, you're going to get back $50,000 a year in interest. Right. Well, guess what? In 1978, that you would get back 200,000.
Wow.
In interest. So what happens? So why would you invest $1 million in the stock market and take a risk when you could just put it to fix a bond is a guarantee?
Right.
It's a guarantee of a U.S. government bond, right? So if interest rates are 18 or 20%,
you can't.
Money flows out of the equity market into the bond market. So what's happening right now is interest rates are so low that there's no point to keep your money in the bank or in bonds because they don't pay anything. So everyone puts their money in the stock market. But what happens is if inflation starts to kick up, what does the Federal Reserve have to do? They have to start raising interest rates. As they raise interest rates, the fixed incomes all go up. And guess what happens? Money flows into that, big institutional money, because they're all looking for the return. So when the rates go up, money flows out of stocks into bonds. In the normal world that I grew up with, that everyone that really knows investing, there was this cycle of high interest rates and low interest rates. And when rates tick up, it's bad for the market. All of that ended in 1999 when George Bush refused to let that happen after 9/11 combined with the dot-com bubble. They flooded money. They kept interest rates low. They told Americans to go out and shop, and there became a disconnection in the normal economic cycle that we all learned about on Wall Street economics, and there was a disconnection there. So there's like this sort of that started a disconnection that's still going today, by the way, where we've been in a low interest rate environment for God knows how long. It's insane. So, but one day, imagine if inflation really starts to kick up, what would happen? The government's going to have to raise rates, but how do they service their debts? That's the quagmire. That's sort of the black swan of it. I think that everyone is most worried about what happens if inflation kicks up. That's the big deal.
Right, man. I think you're totally spot on. I mean, obviously you're spot on, because I remember reading that the interest rates, the inflation was only going to be like 2 or 3%. And I remember thinking, after seeing all that liquidity getting pumped out, by the government, the feds, thinking that's like nothing. That's like a percent difference, which is, it makes no sense. You'd mentioned 2008. You said there's some similarities now to 2008. And I'd like to kind of pick your brain and see what you think that is. Do you think there a lot of the different things happening, back compared to 2008, the crazy housing market crash? Do you think that we're kind of approaching some of those same things now in today's market?
Yeah, I do. I think I see it, like, for example, we're seeing it in cryptocurrencies. And we're seeing that in real estate prices. Like, asset prices are like, they're just flying up. And there's, in crypto, it's weird because there's nothing really backing it. So it's all about sentiment. And so it's interesting, and again, I said, I'm a bull. I'm very much involved in crypto. I like it. I like the centralized finance, decentralized commerce. I believe in it, but I don't, that doesn't mean I don't believe that eventually the price of Bitcoin will crash. I think most people think it will crash, but I think it first goes much higher.
Right.
Like, I think it goes to 100,000. Maybe I'm wrong, but I think it goes higher before it goes low, but I think it's due for a big correction at some point. And that doesn't matter really, because Bitcoin is like, it's not meant to just always go up. It's supposed to be a stable source of value, and nothing can just keep going up. Right. It doesn't make any sense.
Yeah,
it's like, it doesn't make any sense. It wasn't how charts work. Satoshi, he didn't design it for that. Yeah. He wanted it to be currency. It took a different turn, and it became a store of value, at least for now. But I think ultimately, digital dollars or yuan, whatever it's going to be, will end up being used in commerce just as much as anything else. But I think that right now I don't know. I mean, I just think it's pretty obvious that, like, everything is flying up, but inflation is staying low. How is that? I don't know.
So I would speculate, there was a lot of things that weren't brought to the public, and when everything came crashing down, a lot of stuff got exposed all at once. Do you think you're going to be looking at a similar situation now, where there might be some manipulation happening behind the scenes, where that could, we just don't know what's actually happening to push things up? Because we know about liquidity. They're printing bills, which isn't matching the inflation rate, and the stock market's still going up, which means the bond yields are down. But I mean, that seems like a really easy answer to, that's definitely something that I don't comprehend to a certain degree, and I'd be interested to hear what you think.
So there's another factor involved here that is sort of an X factor, in the sense that, technology has increased efficiencies in things like manufacturing, and you just have a lot more productivity per man hour because of technology. So there's been massive changes happening that do sort of put a monkey wrench in the traditional cycle. The stupidest thing that we could think is that, the world has changed. Everyone says that it never changes. The world, people are people, and human nature is human nature. We go through bubbles all the time because it's human beings that make bubbles, because that's what we do. We all do. That's just our nature, right? But there are, like, for example, this whole idea of how much oil is there in the ground. What's how much oil is there, right? And when I was younger, it was like, there's only X amount of oil available in the world, and we're going to reach this thing called peak oil in some X year, whatever year it was. Doesn't matter, because we never did. But what people didn't count on was incredible advances in technology that unlock new reserves. So, like, in other words, what does something cost to make, to manufacture? Well, if you can have massive increases in productivity, it brings down manufacturing costs, which is suppressive to inflation. So part of what's going on here is these increases on productivity that have been keeping inflation. They're definitely somewhat keeping inflation more in check than not. It's definitely a good thing for inflation. So there's a lot of moving parts here. Okay. But I think that, I wouldn't say there's anything like, that I could point to right now that's other than the obvious stuff, like, right, things that are just like, you could point to Bitcoin, NFTs. Okay, well, yeah, maybe it's just complete all just nonsense. That's possible, but it's not a big enough part of the system that if Bitcoin went to zero tomorrow, you'd have a lot of very sad millennials. I'm sure the Winklevosses would be very upset, and I'd be upset too because I'm involved in it myself. Right. But it wouldn't be like it would have virtually no impact on the economy. It's too small a part of the economy to make any difference. I don't think even if Bitcoin turned out to be like it's just people. Let's say all the governments of the world said, no more Bitcoin. We're not allowing that anymore. I don't think that is pervasive enough in the system to have an impact that big. I really don't. I don't think it's big enough, right? So I don't think so. My thoughts on that don't really matter in terms of like, is that going to be something that is a fraud that's exposed that will impact everything? The only thing that could, I think one thing that we all have to look at here, which is a really, really important point, is that the US dollar is the global reserve currency. And China is aggressively trying to knock the US off of that position because it's that position as the global reserve company that allows us to do all this stuff that we take for granted. Buy cars without any money. Buy homes at inflated prices because the global reserve, we're the reserve. The Federal Reserve can print as much money as they want without consequence because it's the dollar that's the reserve currency. If that wasn't the reserve currency, you couldn't do it. You'd be like Greece when you run out of euros and you're screwed. You have to go in these austerity programs. Everything collapses. So China now is just launching their own digital yuan. The problem with China, though, is that no one trusts China, really. So I don't really see China as being a legitimate threat to the U.S. dollar. I really don't. Because who in the right mind want to use yuan? Because, like, the way the digital yuan would work is the Chinese government would literally be able to take your money in an instant if they didn't like you. Or it's the ultimate big brother is the digital yuan. Right? Like the crypto yuan is it's the ultimate nightmare of a blockchain technology coming to pass is the digital yuan. And nothing against the Chinese, just that the way their government functions, they do a lot of things really well, by the way, but it's just very, that digital yuan could be in your account, it's out of your account. Who knows? Like it's just, right. It's ether, right? But I think that the biggest threat would be if something disrupted the U.S. dollar as being the global reserve currency. That would be an absolute shock. I don't think that the world would kind of come back from so quickly. That's the biggest threat I see.
Interesting.
And China's trying to do that.
It's fascinating that you'd say that too, because I've seen some differing opinions, on different news sources such as CNBC, Fox, whatever, talking about Bitcoin eventually acting, 10, 20, 30 years down the road as some sort of currency that's adopted by the US bank system. Do you think that's a possibility? Because I see the US dollar. No,
not at all. I think that's insane. I think it'll never happen in a million years. And I've been wrong. I thought Bitcoin would disappear. But right. I know a lot about Bitcoin. I don't think Bitcoin in any way, shape, or form is meant to be that. I just think that the dollar is going to be digital. It'll be a digital dollar, which it kind of already is in the sense that each dollar's got its serial number. It's digitized right now. But just, in other words, listen, I think a lot of people don't really understand this. Like what blockchain and crypto really is. It's decentralized finance. All of the things that people know about, Coinbase, BitPay credit cards, they're all nonsensical, really. In the mind of what blockchain was supposed to be, it's like shoving a square peg in a round hole. Why would you take Bitcoin and put it on a central exchange? Because it defeats the purpose of Bitcoin. Bitcoin's a decentralizing tool. As opposed to the whole architecture is decentralized. So when you take Bitcoin and put it on a central exchange, it's like a joke. Right. It's a complete joke. Right. It doesn't make any sense. Right. So like Bitcoin is not very good as a currency. It's terrible as a currency. It's expensive to move around. It's slow to move around. It just doesn't work very well. Now, I personally have a company I'm working with that actually is trying to change that to make it so it can be used for currency and actual commerce. And I think it'll be a huge breakthrough to be able to use Bitcoin. But I think that, in other words, there's going to be phases of adoption. Like, for example, one mistake that we make here is that we think of things in U.S. terms. We have a stable currency. Well, if you're living in Venezuela or Argentina or Africa somewhere, or many countries, like, Bitcoin represents a really important store of value for people because like it's like versus their own shit currency that keeps going down and becoming more worthless every day. They have something at least as stable or tends to be going up now. So that's a huge issue, like in other countries in this developing world, right? Having something like a Bitcoin or an Ethereum or whatever it might be. But I think at the end of the day, the United States itself is going to have its own digital dollar because it will use all the advantages of digitizing a dollar, which would make it's very big brotherish. It's really not it's exactly what the people who founded crypto were hoping would never happen. And I think that's what's going to end up happening is they're going to outlaw the use of I think they'll allow crypto to be used, but there'll be very severe off ramps and on ramps back into you won't be able to do it without in the shadows. You can use Bitcoin as much as you want, as long as it's reported exactly, and I already believe that the NSA knows exactly everyone's Bitcoin. I really believe that. And I think Bitcoin's not even very good for money laundering. It's not really, there's better privacy coins like Monero, things that are meant for that. Bitcoin's not. But I just don't think Bitcoin replaces the dollar. I think Bitcoin is more like replaces gold, if anything, not the dollar. Okay. I don't think it's meant to be the dollar.
That makes sense.
That's the point.
Okay, so staying on this Bitcoin topic, with an upcoming bear market, whether it's a year down the road, 2 years, 3 years, 4 years, do you think that Bitcoin's going to get wrapped into that? Because what I think about is, as you mentioned, a competition essentially for liquidity, whether it's the real estate, bonds, the market. Now Bitcoin kind of being its own separate market that doesn't really follow the NASDAQ or the SPY or any of those different, ETFs, index funds, whatever it might be. Do you think that's going to be something that ends up coming crashing down if the market enters a bear phase?
I do. I mean, I think it will crash eventually. Yeah. I just don't know when. And I think there's a lot of money to be made between now and then. Right. I think it goes higher before it goes lower. And I think that even if it crashes, it doesn't mean Bitcoin's not a great thing. Everything goes up, it goes down, it goes up, it goes that's normal. I mean, there's nothing wrong with that. Right. I don't think it's like that. Bitcoin, in the early days, my biggest concern with Bitcoin back in the early days, and I was right. I called it almost to the day in 2017. I knew it was going to crash. I thought it would be outlawed by. I literally thought the governments would say no. I'm shocked that they did it. So my being a real Bitcoin bear during those years, I was very clear about what my bearish thoughts were being based on. It was based on that I thought the governments of the world would literally squash it because it just represents a lack of control of the money supply. And that just doesn't seem possible. They would allow the money supply to go into Bitcoin. Now what's happened is Bitcoin has become, it's not money. It doesn't function like money right now. It's a speculative store of value. So it's not being used like money, so in transactions, you understand, it's taking a very different approach. Right. And I think that the most healthy thing that could ever happen to Bitcoin is more regulation. The more regulation you put on Bitcoin, the more it bodes well for Bitcoin's future. I don't think you want to look at Bitcoin as being an adversarial instrument to the traditional finance system. It's got to be part of the traditional finance system. That will be the most bullish thing ever for Bitcoin. And I think that's the direction that things are going in. That's why it's good. So I think there might be some hiccups along the way. There might be a lot of I think there's a lot of regulation coming in this year to Bitcoin. It could drive it lower, but I think ultimately that's a good thing for the long-term prognosis for Bitcoin. Because my big problem with Bitcoin was the government's just going to say, it's zero. If you buy or sell it, you're going to jail. You get it like that. Right. They could do that. If they really wanted to, they could do that. They could make it illegal. They did it with gold. I don't think they realized that, gold was illegal to own in the 40s.
I didn't know that.
You go to jail. Yeah. They outlawed individuals owning gold. Yeah. And then up until 72, every dollar was based on gold. Most people don't know this stuff. The government passed a law, quite sure it was in the 20s or 30s, I think, I'm not sure the year, but they made it illegal for individuals to give your gold, you to return your gold to the government, or else you go to jail. So they could do stuff like that, okay? And then ultimately in 72, Nixon took us off the gold standard. So every dollar was backed by gold in Fort Knox. And then they made this floating currencies that you say fiat currencies came into vogue, and the fiat currencies have advantages. They allow bankers to control things and manipulate things by using leverage and printing currency without any backing. And it's more based on the fact that the U.S. has got really cool aircraft carriers that can blow you up if you don't play by the rules. And at the end of the day, all money it's based on how many nuclear bombs we have and how many aircraft carriers that will send in our special forces and blow the fucking company. If you don't play by the rules of economics, we'll blow you up. That's what it's all based on. That's all the reason why the dollar has value. It's based on military power, the ability of the U.S. to project power, and it's always been like that. Rome was the same way. It's based on projection of power. There's like the stuff that's a real deep economic stuff, but it really is what drives everything.
That really puts a lot of perspective into my job. I'm actually an active duty officer in the military. I haven't shaved in a couple of days, but wow, I've never thought about that. I'm going to be honest with you.
Think about it.
No, that's. Yeah, I mean, it makes sense.
Think about why the dollar is the reserve currency because of the Navy SEALs, really, because we'll blow the shit out of you if you don't play by our rules.
Right.
Oh, you're not giving us the oil? Great. There you go. Bye-bye, Saddam Hussein.
Right.
No, think about it. And they made that point. You don't play by the rules in Argentina? Oh, we'll take the Falklands. It's all military might. Projection of power. That's why countries are countries. We forget that.
Definitely. Wow. I feel like I've learned a lot chatting with you about all this stuff. That's really cool. That's good. I think there was another question that I wanted to bring up, and this was regards to sort of the biggest lessons that you've learned with all your years in the stock market. I think one of the best assets that you have as a person is your experience. You've seen a lot of things, you've done a lot of things. So through your experience in the stock market, being a broker, going through this whole process to get to where you are now, what advice would you give to people who are getting into the market right now? Because I think there are a lot of new investors with technology, being able to buy and sell in the blink of an eye on your phone. There's just a lot of new people out there who maybe don't know things they don't know. You don't know what questions to ask until you know what questions to ask,
My best advice I give to everyone is that if you want to play in the game of speculation, which is a really fun game and you can make a lot, right? You really just gotta be up on it. Like, you can't be a dabbler in this stuff. You got to really pay attention. I talk a lot about fundamental value, but at the end of the day, it's like, if you're going to try, honestly, if you want to play the game of finding fundamentally sound companies, I would strongly advise you to just put all your money into spiders, into the EFTs, and buy the S&P. That's your best bet. Just buy it and hold it. You'll do much better just buying the S&P and holding it than trying to go find 10 stocks that are really great.
Right.
Okay. Biggest lesson, the biggest mistake I made at Stratton was in my hope of trying to appear legitimate, I tried to find companies that actually had a business versus companies that had no business at all, but just really crazily big, good ideas. It's those big ideas that actually are the ones that the stocks end up taking off.
Right.
It's not about earnings and assets. In the game that you're playing right now, a lot of people are investing in. It's not about earnings. It's just not about that. It's about what's got the exciting proposition. What's the latest thing? But you got to really stay up on that stuff. Like, you got to be really like, if you want to play it, you can't just be like, I heard a tip, and you're going to stay in the rooms, in the chat rooms, get into a network of people that know, and just really keep yourself abreast of this stuff. There's a lot of money to be made in the market in this sort of crazy story stocks that run up and then plummet back down. You can be on the right side without risking the farm every day, but you got to really stay up on it and just remember that when the market becomes bearish, that game doesn't work anymore.
Right. That's that makes a lot of sense. I think the game is speculation. It's that idea of, buy the rumor, sell the news. Essentially, if there's a lot of excitement in the market, long term, as we've kind of mentioned, obviously I'm a relatively new investor. Based on my experience, everything returns to their fundamental value. The bull market, it's overvalued, vice versa with a bear, but they'll always come back long term to their true value. With this speculation idea, you can ride that wave up in the short term to make money on speculative plays that people are excited about. So that's there you go, spot on. Awesome. I think that's most of the questions that I have. Is there anything that you want to talk about otherwise?
No, listen, I think you're doing a great thing, buddy. I like what you're doing. You're giving people good information, so keep on doing it, and just remember, just, make as much as you can while the times are good, and then be more conservative when times aren't good. And it's always it's all cycles.
Right.
You're in a good cycle now. It's a good time to make money. So go for it.
You know, my journey to investing was pretty goofy. I was an elite runner. I ran marathons essentially, and I ran into a heart condition, got diagnosed with that, and I'm not the kind of guy that can just not do something. You know, I got to get something that gets me out of bed in the morning to be excited about. And for me, that's the market. You know, I'm only 23 years old. I am relatively new. I don't know everything, but I try to grow every day and get where I'm supposed to, go eventually. So I appreciate that. It means a lot, Jordan.
You got it, my friend. Good luck.
All right. Thank you. You have a great evening.
Take care, pal.
All right.
Bye-bye. Bye-bye.